So I guess kind of switching gears a little bit. Again, now we have lower rates than we did have a year ago. What if I'm a first time home buyer? And I think a lot of people kind of have been just sitting on the sidelines. Like you said, it is very competitive to get a house. Housing
Right.
prices are higher. So I think a lot of people have just said, you know what, we'll just keep saving our money. So when rates come down and when there's a better supply, we can actually be prepared for that. And I do think there's a lot of people kind of
Yeah,
waiting for that. What should they know about buying their first home in this environment, or things like that?
sure. I'd simply advise that mortgage rates are unpredictable. That the timing of the mortgage with the market is there's no guarantee day by day that next year is going to be lower rates. So if they have that house that they really love come on the market, then go for it. Because you're really only you're renting your rate, and you're not stuck to that rate. So you want to buy that house that you like, get it now, because in the future the rates could be lower, but the house prices could be higher, which would be put you at the same payment you're at right now. So
Mhm. I think that's a really helpful point that you make. We kind of give such an emphasis to rates and where they're at today, and for good reason, because that does affect people's monthly payment in a really
mhm.
large way, depending on what those are. But I think one of the things that you talked about, like before, even before we started recording, was so I'll let you touch on it again, is just that rates, might be higher or lower, but also housing prices, like that's assuming housing prices just stay the same
Right.
as where they are. And so you just kind of said something like to this effect. So talk a little bit about that, is like the housing price versus the mortgage rate. Both of them move. So we
Right.
can't just say wait for one to change, because the
Right.
other one could change too, right?
Right. Nobody's got that crystal ball and telling you exactly when the perfect time is. I don't know if there
Mhm.
ever is a perfect time. Uh, so you just go into it knowing that you're always going to have your mortgage reviews, and if save money down the road. But you definitely want to be able to afford what you're getting into. So
Yeah.
you don't want to jump into, if the rates are higher now, but you were approved for a certain price home, and then now the rates are higher. Yeah, you're approved for a little less of a loan. But you want to jump in there and having be house poor, or not be able to go
Hmm.
out to dinner or go. So
Yes.
yeah, every
Yeah.
individual is going to have something different. I mean, so there's a lot of bond
Hmm.
programs out there. There's a lot of grants that we're giving. There's boy, a whole lot more than last year than what we talked about. So I literally have to go to my chart of different loan programs and different down payment, and some require to be under 50% of the area medium income. Some are at 80%. IDA still, Illinois Housing Development Authorities, they still have where you can make more money than the rest, but that's a the forgivable loans is over a certain period of time. The grants that I've been dealing with right now are forgivable right at closing. So if you sell your house or refinance within a couple months, you're not having to pay back that down payment assistance that you were given. I recently could think of a lady that I was renting an apartment, and the rents are going crazy right now. And uh, I I was able to close her with 3% down, and was able to give her $12,000 worth of grant money, which I think her total out of pocket was less, or 1% of the purchase price, and her monthly payment is lower than her mortgage, or than her rent would have been. She
Wow. Yeah.
so she never had to be out any extra money out of pocket, because the money that she had to put into the transaction was as much as her rent was. So, and when you close on a mortgage, you generally are paying a month after that. So there was really no change in her monthly financial
Wow.
situation. So
Yeah, that's the thing that's so interesting, is that rates, housing prices, your current situation, if it's rent, like all of those things can be changing. So
mhm.
it is, the nice thing with a mortgage rate is you can lock that in when you know what it is. So we know they've gone from 8 to 6.5, so we can lock that in. And if they even decrease further, you can lock that in. You may or may not be able to lock in a housing a price,
Yeah, you can't.
because
Right.
depends on what the competition looks like for that specific home. So I think
Right.
that's interesting and really helpful just for people to even realize all of the moving pieces. And so, do what you can, but also just be asking what's possible too. So I think that's really helpful. Okay. I guess, are there anything, so they qualify for the loan? Really, the biggest piece in all of these is still income, right? It's
Mhm.
income, what you have, what you're earning as to what you qualify for, right?
And then,
Okay.
of course, job stability. So if you're going back off of retirees, to get a mortgage, if you just started a job, you haven't worked in over 6 months. If you've been unemployed and you just started a brand new job and it's an hourly job or maybe even a commission job, then you might not qualify. Or you were on a salaried position and you decided to become a consultant, a 1099 consultant, then you're not going to qualify for 2 years. So it's really important to get pre-qualified before you start looking for a house or
Okay.
before you
So
sell
can,
your house. I had
yeah.
a instance where a client, they're just so used to getting approved all the time that they sold their house and then they came to me for a mortgage and I said, "Oops, you got a problem. You just started at 1099, so we have to take a 2 year average." So she was able to get hired as an employee, luckily. So we were able to
Wow.
save that deal.
So can we let's touch on that a little bit. So someone who has a regular salary job, they've been employed, they're fine. And as long as you've been employed for how long in that position, your income will count and there's no issues.
So generally, you have to show that you've been employed for 2 years. You got to have a 2 year work history. It doesn't
Okay.
need to be exactly in that same line of work, um, but if you're switching from a salaried position to a commission job, then the commission we have to give the underwriters a good idea of what your income's going to be, and so they want to have a 2 year average on the
Okay.
commission income. If it's a so sometimes you get away with just 1 year of tax returns. Findings will come back. So then,
Okay.
sometimes you get away that 2 years could be a little gray. But
Mm-hmm.
yeah, so
So someone,
you have to show job stability is the main thing.
okay. Okay. So someone who has just made that change is now a consultant. They probably need to wait. How long is it going to be, that full year if
Two,
they've just done that?
yeah, a minimum
Okay.
of 1 year, but
Okay.
ideally 2 years on a tax return.
Okay. So that person, essentially what happens is that their income is not going to be included in the mortgage. So if their spouse is working and has income,
Oh,
that's going to
sure,
be the only income that could be used. It's just that that person who's now changing because they don't have the 2 year history, they can't qualify with that possibly, right?
right. Or they might have
Okay.
retirement funds that I could take a percentage of their retirement funds and use that as income. So
Okay. Okay.
yeah, that might work
Okay.
too. I mean, I've had people lose jobs before closings, and we were able to use alternate ways of calculating income.
Okay. I think it's helpful too because, I think sometimes when we talk, it's kind of like, how can we get you to qualify for this mortgage? But I've got to believe that there are a lot of instances where people just don't qualify based on whatever factors, but maybe there's not as many, I don't know. Do you see that very much?